Good morning, traders and investors. Roger Scott here, senior strategist for Wealth Press. Today is Wednesday. It's May 17th. It's about 7:34 in the morning. The market's going to gear up to open up in a little bit less than 2 hours, about an hour and 56 minutes, if my math is correct. I want to thank you, and I appreciate you watching these videos. Please, please, please subscribe to our YouTube channel, like this video, and our Telegram channel is in that link that's right below this video in the YouTube Wealth Press channel. So you can subscribe to my Telegram channel and get all my goodies, and I post pictures of my cats there sometimes. Anyway, welcome, welcome, welcome. It's a very interesting day today. Let me explain to you why. First of all, the Dow's up about 134 points pre-open, and the Nasdaq's up 28, so there's definitely a lot of strength in the Dow. Now, let me explain to you why, to kind of give you a roadmap. Yesterday, Walmart, what's the ticker for Walmart? Walmart, WMT. Still too early in the morning. Haven't had my caffeine in 3 months. Notice that Walmart went down about $1.38. They came out with really bad numbers. And that kind of set the tone yesterday. Plus, we had economic data like retail sales, which was okay. We had industrial production, which was okay. And today we're going to have housing starts. So the data wasn't really that bad. It was actually a little bit better than expected and a hell of a lot better than the Empire State Manufacturing Index. But this morning, guess what happened? Target comes out with earnings. So yesterday was Walmart, and today it's Target. And Target says big box retailers stuck with its, I think it was Walmart yesterday, big box retailers stuck with its full year outlook. It expects comparable, let me just pull up Target while we talk about Target, right? Let's see here, the stock is up. It expects comparable sales with range of low single-digit declines to a low single-digit increase. Target said its full-year adjusted earnings were between $775 and $875. They said even as customers buy fewer discretionary items, Target is drawing them to stores with groceries. This is what I was saying. People are shopping less at supermarkets. I was doing this yesterday. And they're shopping more at big box stores like Walmart and Target. Everyday essentials and on-trend items. Here's what Target reported for 3-month ending April. Earnings per share, $2.05 per share. They were expecting $1.76. Revenue, $25.32 billion per share. They were expecting $25.29. Their net income dropped to $950 million, or $2.05 per share, from $1.01 billion, or 216 cents per share. Not bad. Total revenue rose nearly 1% from $25.17 billion a year ago, coming in just above analysts' expectations. Now, to me, this is very, very significant. In my opinion, this is very positive, and that's telling us that people are spending money. They're just spending money in different places, and they're buying less consumer discretionary and more necessities, which is exactly why consumer staple sector is up and why I've been so interested in it. So Target's looking good. But more importantly, Target is a very influential stock. So if it moves higher today, it may prompt the rest of the market to move higher as well. But this is a very good sign for the market, something we weren't expecting. Another thing you need to really pay attention to right now is the regional banks. Not because they're doing bad or because they're doing good, but because the sentiment towards them is so negative right now. I'm actually short this ETF, and I think the prices are going to continue moving a little bit lower. But you got to be really, really careful right now with regional banks. And if you don't want to short the entire KRE, you can go to the constituents page and you could find all of the regional banks like Zion Bank, MTB Bank, and these make all, anytime it rallies right now, till we get out of this mess, they make very good short targets. So just something you need to pay attention to. Now let's talk a little bit about global economy and put everything together, and then I'll get into the technicals. But this fact about Target is a very positive sentiment change today, and one of the reasons why the Dow is up, because it shows that people are not spending necessarily less money. They're spending the same amount of money in different places, which means stores like Dollar General, Dollar Tree, Target, Walmart, second-tier stores, not Albertsons or Kroger, but second-tier stores is where the money is. I know my in-laws have been shopping at Walmart, and I know my wife goes to Target every Saturday to buy stuff like my Quest bars, and because they're just cheaper there and the food is good. So a lot more people are going there for different items, which is a very good sign, not a bad sign. So market participants pin hopes on talks in Washington to resolve the deadlock on raising U.S. debt ceiling. U.S. President Mr. You-know-who Biden said he was optimistic about securing a deal to avert a U.S. debt default. At the same time, Kevin McCarthy said after an hour of talks that the two sides remained far apart on the agreement to raise the federal borrowing limit. And I predict it's going to go down to the last minute. So it wasn't Walmart. Sorry, it wasn't Walmart that reported earnings. It was Home Depot that reported earnings. Sorry about that. Home Depot. That's where I got confused. Home Depot. And Home Depot dropped by more than 2% after report. I get confused. Home Depot, Walmart, they're in that kind of same warehouse stores. Than expected first quarter net sales, lowering its annual comparable sales forecast. So that's what really drove the market down. But today we have Target, and Target is saying different things, that people are shopping there. They're just buying different type of stuff. Now, a year ago, Target got in trouble because they said people were buying stuff, but they didn't have anything that people wanted to sell them. That was the biggest problem because it was after COVID. Supply chain problems. But this time, it looks like they have something to sell people, and things are looking better than expected. So this will give consumer staples, because people are buying consumer items there, a little bit of a bank today, in my opinion. Economic data on Tuesday showed that U.S. retail sales came in at 0.4% weaker than expected, but core retail sales was in line with expectations. Even though the number wasn't all that great, it wasn't all that bad either. April industrial production rose 0.5, stronger than expectations. Richmond Federal President Barkin, now this is where things get really interesting, and this is where Mr. Squirrely, you know who I'm talking about, Jerome Powell, he's putting himself in a corner again. He just keeps putting himself in a corner. Remember he said he's not going to raise rates anymore? We're going to pause and see what happens? Well, Barkin said Tuesday he would be comfortable with more interest rate hikes if necessary to bring inflation down. Does that sound like a pause to you? And if more increases are what's necessary to do that, I'm comfortable doing that. He's talking about increasing rates. Cleveland President Loretta Mester said, Federal Reserve is not yet at a point where it can hold rates steady. I see more evidence that inflation is still moving down. Folks, am I crazy or am I misreading? I'm quoting them right now. Does that sound like we're going to pause? So look at what happens with the bond market. The bond market, remember, it was almost 90%. It was almost like 90-10. Well, now we only have 78.6% of a no hike and 21% of a rate hike. And I predict these numbers are going to increase and get closer to 60-40, 50-50 before all fun and games are over. Target already came out with earnings. Cisco is going to be coming out with earnings. TJ Maxx will be coming out with earnings. I expect good things for TJ Maxx because if you follow the same logic as Target, people are not shopping at Macy's or Bloomingdale's, but they're shopping at TJ Maxx, right? They're shopping at lower tier retail stores, and that's what TJX, Ross. This is what I was saying a year ago, how TJ Maxx, Ross, all these stores should do pretty good if there's an economic downturn. That's why I've been so bullish on Dollar General, Dollar Tree, and all these stocks. Today we're looking at the real estate sector, which seasonally looks really good for the next couple of days. U.S. building permits preliminary data is coming out at 8:30 today. And in Europe, oh boy, investors digested the final Eurozone inflation print for April. Eurostat said on Wednesday that the headline inflation accelerated in April as rising services and energy costs offset a slowdown in food prices. Similarly, China closed lower as a weak economic reading in April weighed on sentiment, causing some economists to lower their growth predictions, and I'm one of them. Barclays economists slashed their GDP from 5.6 to 5.3 amid concerns around the sustainability of the recovery in the housing and consumption. And I agree, it's tough to get out of a 3-year COVID cycle. It's tough. Heavyweight China property stock lost ground on Wednesday after data indicated the country's house prices dropped for an 11th consecutive month in April. That's not happiness. Nikkei, on the other hand, I should have did a hedge buying Nikkei and selling China. They closed higher, hitting a 20-month high as weaker yen export-oriented stocks, while momentum from strong earnings season continued to boost sentiment. Data on Wednesday showed that the Japanese economy grew faster than expected in the first quarter, held by strong consumer spending and inbound tourism. And I'm bullish on Japan. I think the Japanese yen is going to rally because they have new leadership. Today, you have Container Store reporting, or actually they're not reporting, they already reported, and Wynn Resorts. Now, Keep an eye on Wynn. They got upgraded. Keep an eye on Wynn. Keep an eye on Caesars. Keep an eye on the Vegas stocks because they've been giving us good long-term relative strength. Matter of fact, let me just show you where they stand right now, so you could see where they are. Last time, Las Vegas Sands. Look at where it is. Look at where Wynn is. This is my relative strength screener. So they're really up there. I mean, Las Vegas Sands is 1, 2, 3, 4, 5th place. 7th place is Wynn. And I'm pretty sure that Caesars or Hilton is not far behind. But the point is, keep an eye because they may have another pullback under their sleeve or up their sleeve. Again, Cisco's reporting, Target already reported, TJ Maxx is reporting, but I think Target is going to be bullish for this market, and I'm not expecting the housing starts to come out really bad. And again, retail sales were okay. My concern is the Fed speakers talking and telling us not what Squirrely has been telling us. Now, looking at the bond market, let's look at the bond market real quick here. Looking at the bond market, which is higher today, is telling us that short-term rates might have... Remember I told you we need to fill this gap? Well, we filled this gap, and I think bonds are a little bit overdone, and this divergence we're seeing is pretty nasty. Look at this. Down, up. So that's telling me bonds might have bottomed out for the current term and they may be heading higher, which means interest rates may be fluctuating once again. But lower pressure on the bond market will put less pressure on the overall stock market. Now, today is Wednesday, and on Wednesday I talk about shorts and longs. Now, let me give you guys a good short and a good long, all right? You guys are going to appreciate this. I'll give you some actionable trades, okay? Let's see here. What do I like right now? What does Uncle Roger like right now? Let's see here. Ooh. I like NVR quite a bit. The stock, it's at $5,800. Forget that. That's not going to help you out. Lilly looks really good right now. Lilly looks really, really good right now. I mean, really, really good right now. And so does Monster Beverage. Lilly, Monster Beverage, and Carpart, which I think we're long Carpart right now. Copart, Monster Beverage, and Lilly are the 3 stocks that I like, that I really like right now. The stocks that would be on my hit list that I would be selling right now, oh boy, don't get me started. Lincoln National would be definitely on one of them. Comerica, I mean, look at this. It just went up for a few days. So I would say CMA and Zion Bank. Comerica and Zion Bank. Sell the banks. Sell the banks, and also I think GNRC has had it too, and I think the stock is going to start coming down. I may want to take a short position in this stock. Also, Fidelity National Services. So you got Fidelity National Services, GNRC, Comerica, and Zion Bank. As far as the Dow Jones is concerned, let's see if I can get the Dow here. As far as the Dow is concerned, it really took a dump yesterday, but I think we're going to be at this support level for a little bit, and I think we're going to bounce up. It'll be interesting if we don't, but we're really oversold on a long-term basis. So expect some upside from the Dow. Expect stocks similar to Target or in the same category as Target. It'll be interesting to see if consumer discretionary and consumer staple rallies, but I think because what they're doing is they're increasing their market cap for consumer staples, we're going to see consumer staples and Target rally. If Target gives up the ghost today, it's not going to be a great day, but I think Target is what's going to be leading the market on Target. Now, before I let you go, stocks are volatile and they're unpredictable. Just look at the past few years. Volatility on the Dow was 695 points a day. Can you imagine? Now it's like 350, but it was almost 700 points a day. And it can go back up there without any question of a doubt. But there's one market that's safer and more reliable than stocks. There is. And it's actually a much bigger market, much more liquid. It's not gold. It's not real estate. It's much larger and older than the stock market. What is it? Well, find out when veteran trader Celeste Lindman's groundbreaking presentation happens today at 1 p.m. Eastern Time. Click the link below. Save your seat. Wednesday, today, it's the 17th of May. Actually, it says Tuesday here, but it's not a Tuesday. It's a Wednesday. Let me update this. What's going on here? Why does this say Tuesday? Weird. Today's the 17th. It's not the 16th. At least I think today's the 17th. Let's see here. Am I crazy? Let's see, look at the calendar. It is 17th. What am I saying? The bar chart is wrong. At least bar chart is wrong. It's not me. But follow the link below. Check out Celeste. She's red hot. 1 p.m. Eastern time, today, Wednesday, the 17th of May. You don't want to miss out. You guys are going to love it. I'll see you later. Comments, feedback, watch my video, and I'll see you soon. Bye, and watch out for Target.